Happy Friday, traders. What a week in markets. We saw some very big moves in markets and some very meaningful moves as well. Look, the ball started rolling on these big moves before the market opened on Monday with the US-EU trade deal. The market got wind of the details and just how one-sided this trade deal is and how much money is flowing from the EU to the US. They sold the euro hard. Now the euro is down almost 400 points now for the week, and it certainly did set off currency trading for the rest of the week, and with that the US dollar has been on fire, and I'd even go as far as to say is potentially we are seeing a trend change in the US dollar this week, in that the US dollar is back in a big way. Now the second big thing that we had this week was the FOMC, and what we learned from the Fed is that these guys do not want to cut rates anytime soon, that the employment market is still solid, so no dramas there, and they still need to see progress on inflation. And at the moment, obviously, they've got an issue because tariffs are going to raise CPI and inflation. So at the moment, they are certainly on the sidelines. There's no guarantees for September or maybe even this year. So again, that has been a dollar bullish story. We also had a Bank of Japan meeting yesterday. There was some market hope or market starting to think that potentially because Japan had got a trade deal done with the US, so it's taken away a lot of that uncertainty that the BOJ went dovish on. But no, that did not happen. The Bank of Japan, who still needs to raise rates, the policy rate's at 0.5%, inflation's around 3% plus for headline, but we've got no close resolution of whether or not it's going to happen this year or early next year. God knows if the BOJ knows. So dollar yen took off like a rocket ship. So dollar yen went straight through 150 and we're trading up near 151 now. So again, US dollar absolutely on fire. So I would not be going against any of these moves. Trying to take the other side for any extended period of time because the story of this week certainly has been very dollar bid. Look, we have had some key data releases also this week, which we saw US GDP much stronger than expected. 2.4% is expected, it's up 3%. Last night we did have the Fed's preferred inflation gauge, that's the US PCE. Inflation numbers for the month, and they were expected to come in at 2.7. They actually went up to 2.8% year on year, and so that's inflation going the wrong way before we get the tariff effect. So once again, a combination of the stronger data has kept US yields a bit higher. We've got US 2-year yields up around 3.94%, pushing back to 4%. Can you believe it? So yes, again, everything that's really come out this week has been, on the dollar bullish story side. Okay, so going into precious metals, they've had a hard week. They've been sold quite aggressively, gold and silver. And obviously that's on the back of that they have priced inversely to the US dollar, so US dollar stronger, that puts a lot of weight on them, and then also the fact bond yields higher as well is not helping that cause. As far as equities are concerned, US equities, look, they've had a very, very strong month. July seasonally is always, in the last 10 years, every July has been positive. And they've been up around about a 3.5% for the month, so really good month, doing record highs almost on a daily basis. But look, last night we did get a bit of a reversal, a decent reversal from record highs for NASDAQ and S&P. And technically, NASDAQ actually did print a bearish key reversal day on the last day of trading. So finally, the sellers have been able to eat a little bit, and a bearish key reversal is, technically a top signal, at least in the short term. And as we move into August now, seasonally, it's nowhere near as strong as what July is. Last 10 years, we've had 5 positive months in August, 5 negative months, so coin flip what happens generally seasonally for August. But we do have first day of August reciprocal tariffs going live. So we're going to find out whether or not the market has been, especially the equity market, complacent on these reciprocal tariffs. One thing to notice on the tariff story is, Trump still hasn't decided or given an extension to the Chinese reciprocal tariffs, which go live on August the 12th. So there's a bit more time there, but if he did not do that, or if he did come down and we've made up some tariff rate, no doubt that would hit the market. So something, no doubt we're going to find out either way, probably in the first week of August, next week sometime. And finally, after such a big week in markets, we still do have to navigate some top tier US economic data, and that is non-farm payrolls, which comes out tonight. So for the June numbers for payrolls, they're, the July numbers, market is expecting 110,000 for the headline positive print, and unemployment rate to go marginally from 4.1 to 4.2. Obviously, we know that the Fed is on the sidelines because of the strong, employment, solid employment market. So if that was to deteriorate, so we've got a number that came out well below expectations, down towards, sub 50,000, for example, an unemployment rate maybe jumping up above expectations to 4.3, market may start to reverse some of this aggressive US dollar buying, bond yields lower, and maybe the market starts thinking that the Fed could come to the table. But it would really need to be a very, very weak number, and payrolls have not done that. They've, if anything, they've always come out above expectations, and if that happened tonight, no doubt we're going to see some very aggressive US dollar buying again, bond yields higher, and maybe it would finally weigh on equity markets as well. Look, I don't know what the number's going to be, but you certainly will know what to do with that number. Just watch what happens with bond yields. That no doubt US bond yields 2 years, you don't want to see those over 4%, that's for sure. And 10s are sitting around about that 4.4% at the moment. So watch bond yields over the number, higher. Obviously, that's not good. Will be good for the US dollar, but potentially negative for equities. Good luck for the end of the week with your trading, and we'll catch back in with you next week.